Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Welcome back to the High Rise, a laid-back, data-backed conversation where we talk all things cannabis from U.S. MSOs to Canadian LPs, products and market analysis through the lens of data. My name is Cy Scott with Headset, and I'm joined as always by Emily Paxia of Poseidon.
Hi, everyone. Welcome to the High Rise.
And today we've got a very special guest with Gerrel Olivier of Pura Vida. Thanks for joining us today, Gerrel.
Thanks for having me.
Awesome.
Why don't we start by hearing a little bit about your background and how did you decide to get into cannabis investing and ultimately begin leading the strategy for Pura Vida?
Yeah, sure. I'll keep it brief. I've been in the finance and investing industry for about 12 years now, and I was introduced to the U.S. cannabis industry about 3 to 4 years ago when a portfolio company, Constellation Brands, at my last shop, made a large investment in Canopy Growth. So after that, I started really studying the space more, and I recognized both, one, the value creation opportunity that was ahead, and two, and really important to me, just the ability to address a very massive social equity and criminal justice issue that resonated as a Black man in America that has been impacted by the prohibition of the plant. And so taking those 2 points into consideration, it was an absolute no-brainer. And luckily, I stumbled upon this opportunity rather quickly at Pura Vida and haven't looked back since.
That's really incredible. And my brother always says that capital is a change agent. And I think that that's absolutely true here. So one of the things we've been focusing in on the podcast is some of the disparity between what we consider like the top MSOs or the biggest companies in cannabis, which for anyone who thinks this is big business, we are still really early, and these businesses in relative size are still quite small, but they've been running ahead from other companies. What do you think it is that those top MSOs have access to and have at the ready that other smaller independent operators don't necessarily have?
Yeah, that's a great question. I think the thing that comes to mind rather immediately is just a differentiated level of access to capital and resources more broadly, which in turn I think gave the MSOs a first mover advantage in the industry and put the MSOs in a position to get their businesses off the ground years ago without compromising a significant amount of economics up front. And, I think it's also no secret, right, that leadership and ownership at the MSO level is optically homogenous. Said differently, there's very little representation of non-white professionals. And I would be remiss if I did not highlight the structural differences in access to resources and capital that make it incredibly difficult for minority entrepreneurs to partake in this multi-billion-dollar value creation opportunity in an equitable way. And I'll caveat, this data might be a bit stale, but to drive this point home, the median household net worth for a white household is about $200,000. And that's about 10x of that of a Black and brown household. And lower net worth is directly correlated to less access to outside capital. And so the effective absence of real competition from smaller players that can't capitalize their businesses in the same way that a larger, more resourceful player can, has also helped the MSOs get to where they are today. But like you said, Emily, we're still in the early innings of this industry, and it's not too late to address this, which is why I think legislation like the Climb Act is a crucial piece in leveling the playing field. And for those who are not familiar with the Climb Act, it would essentially make capital more accessible to organizations in the industry by prohibiting the ability for any federal agency to go after any marijuana-related business, which would open up, access to things like the Small Business Association, community development financial institutions, and more importantly, in my opinion, provide safe harbor for senior exchanges to list marijuana-related businesses. I'm happy to get into why I think that's really important. I know a lot of people talk about CDFIs and SBAs, and I think that's really important. But I think access to the senior exchanges is just important, if not more.
Let's dive right into that because I agree with you. I think there's a disconnect in understanding the downstream implications of not having this access to the listed exchanges. For those at home, right now, the US operators, the Canadian licensed producers do have the opportunity to list on the TSX and also on the NASDAQ. And some of our, for example, IIPR, some of the REITs have that access to the New York Stock Exchange. There's a massive downstream impact of what happens when these companies that are US operators that are EBITDA positive. I mean, we're still seeing gross margins around 50%. We're seeing EBITDA of 25+%, and they're still growing. And for a consumer category, this is an attractive profile. And that's in spite of all of the massive inefficiencies, which we've covered on the pod in terms of the siloing across states, et cetera, et cetera. So, Gerrel, would you mind helping everyone to understand the connection between what happens by not having that access at the listed exchange level through down to all of the new operators who are trying to enter the market today?
Yeah. So I think before we dive into that example, I just want to level set on where the public companies currently trade in the platform in which one could actually invest in these companies, and that's on junior exchanges in the U.S. and Canada, the Canadian Stock Exchange, the OTC markets, very retail dominated exchanges. I think less than 5% of the volume or so is actually exchanged through institutional hands. But I think what compounds this issue is that these exchanges are unregulated, they're inefficient, they're illiquid, and highly subject to market manipulation. And so that's why access to these senior exchanges are important, because those qualities that I just highlighted are all uninviting qualities to smart, sophisticated money. And that limits participation from smart, sophisticated money. And thus it results in these assets being severely mispriced to the negative. And the unfortunate reality is that sometimes investors derive their view of an industry based on what the stock price is doing. And with the cannabis market being way off its highs, as you mentioned, due to some of these issues, the perception is that this industry, for lack of a better term, just sucks. It's uninvestable. And so, going back to the example as to how that impacts a smaller business, a smaller up and coming business, a minority entrepreneur, well, we tend to, as investors, look for benchmarks, ways to actually value these businesses. And as a private investor, what we have is the public equities. That's a key benchmark that we use. And given what I just summarized before, the public equity benchmark that we are using is severely depressed for reasons that are not based on any fundamental reason whatsoever. It's really mostly technical reasons. But we have no choice. We have to actually underwrite what the current framework is when we're underwriting our investments. And so let's say that I get a call from a minority entrepreneur that is looking to raise $1 million. And I say to the minority entrepreneur, well, what level of EBITDA do you think that you can achieve? And she says, $1 million. I'm like, okay, well, the average MSO is trading at 4 times EBITDA. That MSO is profitable and generating cash flow. But you know what? I'm still going to ascribe a 4 times multiple to your $1 million of EBITDA. So your business is worth $4 million. I'll give you the $1 million, but I'll take 25% of your business, which is 1 million divided by 4, right? So you're giving up an incredible amount of economics up front because I have to benchmark you to a mark to market asset. Now, let's say that we expand access to capital and cannabis companies are now able to list on senior exchanges. Multiples re-rate. You have Canadian LPs that trade at 30 times an EBITDA that doesn't even exist yet. Let's just use the 30 times as an example, right? 30 times $1 million of EBITDA is a $30 million valuation. So now I'll give you this $1 million minority entrepreneur at a $30 million valuation. That minority entrepreneur, instead of giving up 25% of the business in the last example, is now giving up 3% of the company. That is meaningful. Your ability to preserve that level of economics up front is exactly why the MSOs have gotten to where they are today, because they didn't have to do that, given the differentiated access to capital resources that they had at the outset, that people that look like me don't necessarily have. Now that minority entrepreneur can actually get their business off the ground and up and running. And by the way, there's a downstream impact on the future cost of capital for the business, right? Once I actually start the business, I'm de-risking the asset. Once that entrepreneur looks to raise that next $1 million of capital, their business is already generating revenue, their business is already generating EBITDA, and so therefore they can demand a lower cost of capital, which in turn just kind of helps them create more value and helps us close that gap that I highlighted before, this 10x gap between household net worth of our white counterparts versus the black and brown. So I'll stop there. That was a lot. Happy to dig into anything in more detail.
No, I think you really just hit on the key points, and just some other facts for those at home who are not tuned in. As Gerrel was saying, with these companies not participating in the listed exchanges, it does discourage the participation of institutional capital. And so not only are we not seeing the multiples, one of the reasons for that is that there's really no liquidity and no volume on these bulletin boards where these names trade, or on the CSE. And so, MJ Research did an interesting piece in 21 about the volume around this. And if you shift from the bulletin boards to the NYSE or the NASDAQ, you see a 12.5 to a 25x change in volume. And so what that means is absolute dollars flowing into these companies is increasing by a magnitude at that level. And then if you see, as these companies are improving in their operations, you're seeing potentially, we've seen a re-rating of the metrics, but I think we're stabilizing there, and we're going to see some really interesting things coming in the next few years as we unlock new markets. And those new markets are places where small businesses and minority-owned businesses can enter and have opportunities to participate. So those are just some of the additional things. And then there's the other side to this, which Gerrel was pointing out, which is the cost of capital. Earlier in this year, we saw, Trulieve, one of the top MSOs, massive MSO, getting their lending rates around 8%. I think effectively it was coming in still above 10% with the fees and everything. But nonetheless, now I'm seeing things at above 16%. And yes, we've had inflation. Yes, the Fed has weighed in and made some moves, but this feels disproportionate to that. And as a small business trying to stand up operations, when there's no market for lending, when there's no banking support around this is just another avenue where the cost of capital is extraordinary. And so it's just another thing. It's another aspect to all of these things, which are downstream of not having, efficient capital markets around this industry.
Yeah, and I wanted to ask a bit about that. Like, apart from maybe like traditional venture investing, in that scenario, that operator you mentioned that was going to do $1 million in EBITDA, are there other channels, that they can go to get money? And obviously, we know there's a lot of banking issues still. And like, what is going to kind of unlock that as well? So beyond like venture, but if you just need a loan, like Emily's point, that's
Yeah.
maybe on more reasonable terms.
I mean, right now, I don't think so. I'm not aware of any platform, organization. You might have some, social equity focused organizations, but I'm sure they're starved for capital as well to deploy. I think a lot of the MSOs have, organizations within their own organizations that seek to help minority entrepreneurs, but there's just still a scarcity of capital in the space. Only 7% of financial institutions actually service cannabis related businesses, and that's coming down. It's not going up, right? And so that's why some banking support would provide a significant amount of relief. And that again, I want to emphasize, obviously safe banking is a part of that, but these plus aspects that have been discussed, I think the Climb Act is integral because it makes it very clear that federal organizations and agencies like community development financial institutions and the Small Business Association can start to play a role. That's where there's capital, and capital that can come into a minority entrepreneur that's looking for $500,000 just to get their business off the ground and up and running without giving up 25% of the company or more, or taking on an interest rate that is double the 16% that you just talked about. So, I think those two would be great. And then obviously we talked about the exchange example as well, but I think those are examples that come to mind, if that helps, say.
Or it helps me. Does that help you?
Yeah,
Yeah.
me too. Yeah, go ahead, Emily. Looks like you're
So
going to
Gerrel,
say
I
something.
know because you just triggered something I had really wanted to follow up on, which was your very good example about the 25% of the business being given up
Yeah.
very early on. Would you mind helping the folks at home also to understand some of the requirements for these equity licensings
Oh,
in
yeah.
terms of ownership? Because you don't have as much to give if you want
That's a
to maintain.
great
Yeah.
point.
So I'd love to hear
Wow.
you kind of help people understand that.
Yeah, I think it varies by state, but generally speaking, there is a requirement for the minority entrepreneur, the equity applicant, to maintain over 50% ownership, right? I mean, there's not really much to say. I've given up 25% on my first raise.
Yeah.
And I can't give up more than, so I then wind up basically being put in this position where I've got no choice and I just become potentially a figurehead for these businesses and I don't get to actually equitably participate in this massive upside opportunity where this industry is going to double and maybe triple over the next 5 to 10 years. But at the outset, I'm giving up 25% of my business, and I can't give up another 25% or 26% without tripping some of the rules around licensing. That's the key one. And then there's also you have to there's in some of these states you have to actually be able to secure real estate before you even apply for the license. There's a cost to that, right? It's not free. You need money to do that. You need resources. You need education to do that. And unfortunately, these entrepreneurs, for the most part, don't have the same level of resources. It costs money to actually even apply. $1,000 may not sound like a lot to some of the folks on this call, but it is a lot to a lot of people, especially in a macroeconomic backdrop right now that is incredibly volatile, right? Where you got rising interest rates, the fear of a recession looming, $1,000, $2,000 to buy a license for an industry that looks like it is on the verge of collapse when you look at the stock price. It's just not attractive. And so these things need to be addressed. And if they're not, then we're just going to miss out again on this opportunity. And especially, again, going back to the macroeconomic backdrop, I mean, the opportunity can effectively get decimated for folks that are looking to actually participate. And the bigger companies are going to be fine. The bigger MSOs are going to be able to make their way through this, and they actually might come out stronger if we don't do anything. There's an argument to be made that if we don't provide equitable access for the industry, the MSOs are just going to get bigger. They're going to continue to consolidate. Smaller businesses are going to continue to go out of business, and they're just going to be even stronger on the other side of this. And they would have created even more value than they otherwise would have if you just had equitable access right now.
Yeah, you're absolutely right. And I remember Senator Cory Booker thinking this through when he was at the hearing for the CAOA and kind of starting to come around to like, there is that issue, right? Where the more it's limited, the better off the existing players are and the bigger they can get and the more advantage they can take of this kind of imbalanced playing field. So I think, you definitely hit it on the head, right? It's like, it needs to be changed because the longer it goes, the worse off it gets. And we're kind of writing the book for what this looks like. And if we don't get in front of it, it's going to be hard to kind of redo it. Yeah, this is the time to make it happen.
Well, I hope that people are tuning in and hearing this because this is truly one of the most crystal clear to me what needs to change, and the way you've shared it today has just been incredible. Is there any final thing that you think lawmakers are not understanding about this issue that you feel like you'd like to connect the dots for them on?
Yeah, I mean, I think we hit on a lot. I mean, I think the last thing I'll say is listen, like I mean, as an investor in this space, we tend to require a rate of return that is commensurate with the perceived level of risk that we're taking, right? And incremental legislation like the Climb Act, like SAFE, any of these other pluses, go a long ways to reducing the perception of risk that we're taking more broadly. It's a very qualitative argument, but it's very valid. And so the more that we can do to lower the perception of risk in this industry, the lower the returns are that we're going to demand, and the easier it will be for more people to access when the return hurdle for the dollar that's going into the industry is lowered. So we just need to do everything that we can as soon as possible especially in a time where the baseline required return is moving higher, given the macroeconomic backdrop. We've got the Fed raising rates, and that has a domino effect on rates more broadly. And so the baseline interest rate is going up, and we need to do as much as we can to mitigate that impact on smaller businesses and minority entrepreneurs in this space that is booming. So I think we kind of touched upon that, but I just wanted to make sure that that's very well understood, because that is how we look at the world and how we view the universe, and it won't change unless politicians make a change to address it.
Well, thank you, Gerrel. This is very enlightening, and it does feel like we're closer than we've ever been to some legislative change like SAFE and CLIMB. So fingers crossed we see this happen sooner than later.
Definitely. Well, thanks for having me. Really enjoyed the conversation.
Likewise.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.